In today's video, I'm going to talk about stock splitting and reverse stock splitting. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, which is a website dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created a valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. If you look at the stock price of Berkshire Hathaway, one stock is trading for almost $500,000. Think about this. One stock is trading for almost $500,000. And that's because Warren Buffett never splits the stock of Berkshire Hathaway. So, and of course, there is, the B version of Berkshire Hathaway, which are priced much lower than the main one. But the point is that Berkshire Hathaway never splits its stock. And if you look at the stock over decades, you can see the growth or the pricing of one Berkshire Hathaway stock. And the reason why one stock is so expensive is because Warren Buffett grew the value of Berkshire Hathaway per share so wonderfully over the years. But I don't know if I can recall if there is any other company like Berkshire Hathaway that doesn't split its stock. For example, when you look at a company like Tesla, I know that Tesla split its stock. And companies do this for many different reasons. But you see, the main reason to split a stock is because when the stock gets too expensive, like Berkshire Hathaway, $500,000, I mean, how many people can afford to buy one stock of Berkshire Hathaway? Not very many. And so therefore, companies, when the stock gets like too expensive, let's say $1,000 or $2,000 per share, they like to split it. So in other words, they create more shares, right? So if, let's say, a particular company has 100 million shares, and then the stock gets too expensive, they can say, well, we'll split it. And instead of being 100 million shares, they might split it so that it's 200 million shares or 300 million shares, whatever it is. They increase the number of shares, and then the price per share decreases depending on how they split it, and therefore more people can afford to buy the shares, right? And so this is equivalent to, let's say one share costs you $100, and then they split it or create two stocks, then now each stock is trading for $50. But in reality, the value that you have, it's the same, right? Because for you and me, it doesn't matter if you have $100 like this or $100 like this. It's the same thing. The reverse of it happens is when, let's say, you have two shares and you want to reverse split it into one share. That happens too. So you have splitting of a stock and you have reverse splits. And I'm making this video because recently Voxtur announced that it will be doing a reverse split. We don't know exactly how much, but they reported they opened the door that they could do the reverse split of up to 20-1. So in other words, whatever the number of shares they have, I think it's like, from my memory, I think it's like 500 million shares. I know it's a little bit more, but if they reduce it by 20, then they will reduce it to like 25 million shares. And if right now the stock of Voxtur is trading for about $1, if they do 20-1, then the stock should be trading at about $20 per share. And you see, some people get freaked out about it when the company is doing a reverse split. Some people get excited when the company splits a stock. And just because a company splits a stock or reverse splits, nothing fundamentally is changing. I mean, think about this. If you have, one share that's trading at $1 and you split it into two shares, each trading for $50, some people might incorrectly think that, oh, now each $50 share is going to appreciate and it might go to like $100. Well, no, not really, because just because the company splits it, there's no more value created. nothing. The value of the entire company is the same. The value per share changes because the number of shares changes, but the value overall doesn't change. And yes, I do agree that, and that's why companies do this, is that when they do split it from this to this, they think that now more people will be able to afford those shares, and as a result, you know, those shares, those individual shares like this might appreciate. The same fear is backwards. In other words, if the company does a reverse split, going from this to this, some people are like, well, the stock is going to sell off, and it's going to sell off towards a $50 because that's where it was priced before the reverse split. And the same thing happens. Nothing changes to the value of the company. There's no reason to be feared. But some, especially microcap companies, abuse this because they would, let's say the stock is at, the stock used to be at $1. And then the company destroyed shareholders' value, and then the stock went down to, like, let's say 5 cents. So they destroyed 95% of shareholders' value. Now the stock is at 5 cents. And then they need to raise money. What those companies will do a lot is they will reverse split so that they can bring the share price. They don't care about value. They will bring the share price to, let's say, from 5 cents to 50 cents. So they will do 10-to-1 reverse split. And now it looks decent to do a private placement because, you know, people like to buy something at, you know, 20 cents or 50 cents thinking that they can get 4x. It doesn't look good to do a private placement when the stock is at 5 cents or 1 cent or 3 cents or half a cent. That's why they do a reverse. So they do a reverse, they will do a private placement, and if the business is horrible, they're going to destroy their shareholder value again. So then the stock is going to go down, they do it again and again, and that's how they keep destroying shareholders value, and that's how they keep raising money through private placements and not really ever enriching shareholders by enriching the management, because then they get paid, you know, salaries and management fees and all things like that. But with other companies, the reverse split is done for a particular purpose. For example, why is Voxter doing a reverse? I don't know if it's going to be 20-to-1. It's up to 20-to-1. But why is Voxter doing a reverse split? And that's because Voxter wants to uplist to TSX, Toronto Stock Exchange main board, from Toronto Stock Exchange Venture, and it also wants to dual list on NASDAQ. NASDAQ has certain requirements that the stock price has to be, I think it's either $4 or $5 minimum, depending on which classification of NASDAQ they're going to list on, or even New York Stock Exchange or NASDAQ. I think they're a little different. One is at 4, one is at 5. But anyway, if Voxter stock is trading at $1, well, it doesn't qualify, right? So in order to qualify, they have to do a reverse so that they can bring up the stock price to, let's say, $10 or $20, and then it qualifies. And isn't this what we all want? And so after Voxter announced that it will be doing the reverse split, I received some messages, people worrying about that the stock is going to sell off because of this. Well, again, the value of the company doesn't change. The number of shares changes. So, you know, it shouldn't sell off just because of that. But if there is no reverse split, there is no NASDAQ. Because look, in my opinion, should Voxter be already trading at $5? Yes, I think it should already be trading at $5 based on the progress that the company is making, based on the growth that the company is getting, based on the revenues growth that the company is getting, and based on the monumental news that happened with attorney opinion letter being approved by Fannie Mae on April 6th. And the stock was ripping. It was on its way to $2 Canadian, and then boom, this big sell-off came, and then everything started selling off. So the market is refusing right now to, you know, to buy something like Voxter because of all this fear everywhere, or misbelief in what the company is doing. So the company really has no choice. If it wants to go to NASDAQ, it has to do a reverse split. So that's for a good particular reason. It's not the kind of reverse split that some other microcap trash are doing to reverse it so that they can keep playing the same game over and over. For Voxter, there's a particular purpose for it, and that purpose is good in my opinion. So next time you see whether the company is splitting shares or doing a reverse split, understand the reason behind it. The value of the company doesn't change, just the number of shares change, and as a result, the price per share might change, but the value of the company stays the same.